Here we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So as we can see here, what we've got recently into the price close on Friday would be an upward price movement that has now overtaken the $20 level once again. So what we're going to be doing in this video is sort of looking at a bit of a week ahead update here, a little bit of a strategy update on the hourly time frame so that we can hopefully develop some profitable trading strategies for this stock going forward. So as I said, this is the hourly time frame, and that would mean that each candle on this time frame represents a 1 hour trading period. As we can see here, we have seen several hourly trading periods that have been positive in nature. This means that the most recent support zone has now moved up roughly to the $19.43 level. That might not seem like a major difference, but in some sense, it is encouraging because we did not see even a retest of this prior support zone coming in at $19.31. Not totally surprising there because what we did encounter as that price low was formed was a very serious period of downside volatility, major price movement to the downside following an earnings release and the announcement of share dilution, stock share dilution. So what this did create in the process was a very significant price gap that has now been seen on these lower time frames. So going forward, this price gap is going to be very critical here because the real question is whether or not there is actually going to be scope for that price gap to be filled. In most cases, what you would expect to see under these types of circumstances would be for share prices to continue moving in the upward direction until this entire price gap is filled. If that did occur, and if that does occur, what this would mean is that we would be placed right around the $23.30 area, because that does mark essentially the top of that price gap. However, there are some risks here because we've already seen some time pass here, and this price gap was really created during the September 11 trading session. So what that means here is that we're almost 2 weeks later at this point. We're well over a week at this point, and the real question is how many of those orders that would have been parked in this area remain in this area. How many are still currently active and open? Because if that's not the case, if we have started to see many of those orders closed manually or automatically, the prospects for an entire upside price movement here into that $23.30 area does start to become more limited and reduced. If the orders are simply not there, there's nothing that's going to trip the orders. So that is really the question to be asking at this point. Because we have really started to see a fairly substantial price movement here to the top side. There really hasn't been any pullback within this price movement. So the prospects that we could start to see share prices top out here somewhat soon does remain a very real possibility. So in order to understand whether or not that is likely to occur, the first thing we need to do is look at the indicator reading. As I said, this is the hourly chart. So the hourly indicator reading tends to be one of the most important indicator readings in the market. You could argue that the daily indicator readings and the hourly indicator readings are the most important to watch because they're the most closely watched. And here we can see that there is some positive momentum that is starting to develop for share prices. This uptrend here has now been tested on 3 separate occasions, and we did see the relative strength index break above its own exponential moving average. So those are all positive signals. On the downside, what you have to acknowledge here at this point is the fact that we have now moved into overbought territory, and in some sense, that should be worrisome because we're only trading we're still trading below $22 per share. We're only trading at right around $21.90 into the most recent close, and even that price movement alone already put us into overbought territory. So, one of the questions that I brought up, several times here is, these upward price movements might seem encouraging, but if this was a price level that would have been disappointing previously, there's something wrong with the trade. The paradigm has probably shifted. So, with those indicator readings in mind and the fact that we are now trading in overbought territory, One thing that we have to, take note of here is the fact that the share price itself did manage to move above the entire exponential moving average cluster. So all four major moving averages on the hourly time frame have now been broken to the top side. So if you pair that with the fact that share prices didn't even really retest that prior low at 1931, you do have some evidence here that there is an uptrend that is starting to form. And then if you pair that with the indicator reading here, this bullish indicator reading on the hourly time frame, you do have some scenarios here that can point you in the positive direction. So, you can take things on balance here. How many pieces of evidence point in one direction? How many pieces of evidence point in the other direction? And at the moment, we are starting to see a fair amount of evidence that is pointing to the top side, with the exception, of course, of this overbought indicator reading, which is coming at relatively low levels. So going forward, what we really need to see here, if you're bullish on the stock, would be for share prices to hold above this blue line here, which is the 200-hour exponential moving average. If share prices can manage to at least maintain that foothold, then you do have some prospects here that there are going to be orders that are still left in place within this prior, September 11 price gap that was created to the downside. Share price movements up into that area would then be expected to face some resistance at 2330. We can't really deny that at this point, because that was sort of the breakdown point and the indication of major share price movements following the company's most recent earnings report. If we are able to break above 2330, the next level to watch to the top side does come in at this 2501 level. Of course, that's a very important psychological level as well. The $20 mark and the $25 mark have been critically important for this stock. It really does seem to gauge where sentiment actually is for GameStop, because, if we're trading below 20, sentiment is obviously negative. And then if we're trading above 25, the reverse is probably true. So, as things currently stand, if you're bullish on the stock, what you're really looking for is for share prices to maintain a foothold above this 200 period exponential moving average, 200-hour EMA, and then retarget, this 2501 level from the bottom. Here's the current stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.